Good afternoon, everyone. Welcome to another weekly market review. It is Wednesday, December 18th, and this is likely going to be the last market review we do for the year, considering next Wednesday is Christmas. So, um, we're going to do the usual, what we do every Wednesday. We're going to go ahead and take a look at the four major market ETFs. We're going to look at the S&P 500 through SPY. We're going to look at the NASDAQ Composite through the QQQ. We're going to look at the Dow Jones through DIA, and we're going to look at the small caps of the Russell 2000 with the ETF IWM. Once we conclude that, we'll take a look at the US dollar, see how it's faring, see how a couple of its currency crosses are doing, and see how it's affecting gold, silver, and possibly oil. And once we conclude that, we will go ahead and take a look at any chart requests anyone that's attending might have. If you're in here and you have a chart that you want me to look at, feel free to type it into the chat, and we will get to it as soon as we cover the major markets and commodities. If you like what you see here, you can always follow me on Twitter at StockDarts, where I usually post exactly what I'm doing, whether it's streaming like today or putting blog posts up on my Patreon page. If you want to see more videos, you can find me on YouTube. And again, as I mentioned before, I usually put blog posts and stuff on patreon.com/stockdarts. A lot of times I'll put up ideas on things to add to your watch list or even possible trades. So if you like what you see here, if you like my style of analyzing the market, feel free to visit me on there. You'll see a lot more trade ideas that I've come up throughout, basically, I think now almost a year and a half. Other than that, let's go ahead and get started. First thing we're going to do is take a look at the ETF SPY. See what's going on with the S&P 500. Alright, so as you can see, the market is very strong. We are hovering near all-time highs yet again. Last week we were discussing the possibility of a breakout or further consolidation, and it was pretty clear that the market wanted a breakout, considering it broke out the next day on Thursday. Overall, we're in a pretty strong Christmas rally. This is something that I speculated would happen for a while now. Those of you that are regulars know that we've been kind of anticipating a Christmas rally, and that's what we've been getting. And basically, since November, we've had a pretty nice breakout in the markets, and overall, we just keep climbing. And this is good news. This is exactly what we wanted. This is what we've anticipated. And the only real issue we have is the same issue we've had for the last month and a half, which is just making sure that we remain disciplined and look for trades that are giving us the good risk reward we're looking for. Because, of course, as the market climbs higher and higher, it becomes more difficult to find names that are giving you good risk reward. And I think really that's the only issue right now with trading this market, is making sure that we are finding trades that are giving us good risk reward rather than chasing the price action higher. But overall, our focus should be to the long side. We should not be looking at short names right now. I don't think taking short trades is a good idea. And what we should be doing is trying to take advantage of momentum as it continues to push the market higher. Now, in the short term, we just had a nice rally from Thursday to Monday, right? We broke out on Thursday, and then we kind of climbed up the next couple days, and then yesterday and today, we've just been basically trading sideways. So we're getting a little bit of a really tight bull flag right now. You can see we've got two little tiny dojis. I'm going to zoom in just to get a closer look at what's happened in the last few weeks. And you can see the last 2 days are real tight. Today's price action is really tight. And this is often what happens after you get an expansion upwards, is you get these tight candles where, we're just taking a rest. We're taking a breather. We're trying to figure out whether we have enough momentum to continue pushing higher. My guess is we probably need another day or two of trading sideways, and then we'll try to continue climbing upwards. But when you have this kind of momentum, sometimes you just sort of just keep drifting upwards, right? So I think the key here is to note that we are definitely in a market that wants to climb higher. I think even if we pull back as an aggregate in the market, there will be names that are going to climb over the next few days. So overall, we should still be looking to trade to the long side, and we should still be looking for names to buy, because I don't expect a substantial correction from here to Christmas, and probably not from here past New Year's and into next year. I think once we get into next January, then maybe we can start figuring out whether the market has enough legs to really continue building on this rally. But I think from here to January 1st, we should have a market that's fairly benign and shouldn't have too many more surprises left for us. So we should be okay to try to climb higher. Hi, Ray. Good to see you in here. And the couple of other viewers that have stepped in as well. Hope you guys are enjoying your the approach to the holidays. I hope you guys are enjoying some time off, or enjoying or anticipating some nice time off to spend with your family over the next couple of weeks as we close out the year, and hopefully we can close out the year in a strong note for everyone involved. So, like I said, I think the market overall, I don't think there's too many more negative surprises in store. I think even if we do pull back, I think they're going to be fairly shallow pullbacks that come back and test maybe the moving averages or maybe our previous levels of resistance. But I don't expect any kind of strong selling to come in at this moment. I think that we've reached a point where the market is definitely going to continue to climb, and at least throughout the rest of the holiday season. And we should anticipate, as I said, more buying opportunities. And it's more of a matter right now of filtering through our watch lists and making sure that we are taking trades that give us good risk reward, rather than trying to, you don't want to get antsy and chase the price action higher, because like I said, there's always a chance that the normal ebb and flow of a market might get you if you start chasing it higher, and we get a shallow pullback, and you end up putting yourself in a negative trade because you got a little impatient and you tried to chase the price action. If we go back and take a look, I think in the long term things are even better, despite how good everything looks in the short term. For those of you that are aware of this, those of you that are regulars, you'll know that I've been watching for a while this breakout that we've had over the last 2 or 3 months, as we've started to really expand the price action above our previous range of consolidation. We spent basically from the end of 2017 through most of 2019, we spent trading sideways. So a year and a half, almost 2 years really, of trading sideways. If you think about it, from 2018 to almost 2020, we were trading basically sideways, a lot of back and forth, a attempted breakdown that ended up being a false breakdown, and we're now really starting to push upwards and start to push and leave this behind. And if you were around a couple of months ago when we were looking at this, I made the analogy that this breakout that we could be seeing could be something very similar to what we saw in 2017, where the market just kind of climbed steadily, or could even be something like what we saw in 2013, 2014, where again the market just broke out and started climbing steadily for almost the entire year, almost 2 years in that particular instance. And I think that we are on the cusp of what could be a move just like that. So there is the possibility that there's going to be bullish momentum for a while here. I don't expect it to be a straight climb like what we're getting right now. I think that there's always going to be back and forth in that, as you can kind of consolidate and push through. And that's what we recently saw through the first half of December, actually, was we had that nice breakout in November, and then we spent a couple of weeks just trading sideways and going back and forth, and now we're starting to get another breakout. And I think overall, like I said, what I like about this is that we're getting signals for breakouts on all time frames, on the short term, on the intermediate term, on the long term, and overall the market is just in a very bullish stance. And while that doesn't mean that we should just trade blindly and buy and hold everything and just kind of stick our heads in the sand, what it does say is that we should be looking to trade to the long side. We should be looking to take advantage of this upwards momentum. And Ray, you in particular, this is not a good time to short, and this is not a good time to try to get cute with it and try to time a top in the market. I think at this point it's pretty clear that the market wants to climb higher, and it's up to us to go ahead and try to take advantage of that direction. If you feel like there's a pullback coming, and the market's going to turn south, then what I would advise in that situation is, rather than trying to catch a short or trying to call a top in the market, just let whatever, the pullback that you're anticipating or the price drop you're anticipating, let it happen, and then buy the dip off of that. That's what I tend to do in these situations where you see a market that's very strong, but you intuitively feel like it's going to pull back here because it's climbed up 6 days out of 7 or 10 out of 12 or whatever it is. Rather than trying to catch a short, which is going to be a very difficult trade, what I do in that situation is I just say, all right, well, cool, I'm going to wait for the drop. I'm anticipating it to drop, but I'm not going to try to short it because it's going to be folly to try to catch that. What I'm going to do is just wait for that drop. I'm going to identify names that are coming into support that I like and buy the dip on those names. And in that situation, you put yourself in a position to succeed where the overall current of the market is in your direction, or you're in the same direction as the overall current of the market, and you put yourself in a position where different factors are adding to your chances of success rather than the other way around. So we'll see. So Ray, good to see that you are hopefully understanding what I'm saying now and seeing the the reason why I say some of these things sometimes. Sometimes you don't really learn until you experience it yourself and you see what's going on. But like we kind of spent a good amount of time over the last couple weeks talking about this, but just to point it out again for those of you that are in here, maybe we have someone new. When you're trading, everyone understands that they have to try to protect their financial capital. That's kind of easy to understand, of course, right? But what you might not understand is sometimes you want to protect your mental capital as well. And when you put yourself in difficult trades, you put that mental capital at risk, and you really put a drain on your mental capacity to trade, because you put yourself in a situation where you're going to have to make emotional decisions because you don't have a clearly outlined trade, or you have a trade that's going against the current, and it's going to be difficult to really make clear-cut decisions because there's going to be a lot of back and forth. So, shorting this type of market, there's so many buyers that are waiting to step in that even if you time it correctly, you might get 1 or 2 down days, and then when you get a strong green day that forces you to try to get out of that trade, and then possibly it does turn around and pull back again. But because you had to expend so much mental effort in trying to decide whether that was the end or not, you will often make a poor decision which will haunt you as things go on. Because let's face it, in hindsight, you can always find something that you did wrong, or something that could have been better on any particular trade. And when you're trading against the current, it only makes it worse, because there are going to be more and more possible situations where you ended up making the wrong choice. So the idea here is we want to make sure that we try to put as many different potential factors in our favor as possible, and one of the easy ones, of course, is to make sure we're trading in the same direction as the market. I'm not someone that usually says, oh, you have to trade exactly along the trend, because I'll often day trade counter trend, and in many situations I will take counter trend trades in maybe the shorter intermediate term. But I think in cases like this, where we have a market that's fully breaking out, I think counter trend trading is not really a good idea unless you're countering the very short term downtrend, and you're trading along the lines of the longer term intermediate trends going up. All right, so with that out, let's take a look real quick at some key levels here on the S&P 500 and try to figure out what kind of scenarios we could see in play over the next couple of weeks. Now, to the upside, there's no resistance, right? Other than the all-time highs, which we are at right now, any other potential resistance would be theoretical. So, for instance, you could say, well, the top of this channel is a possibility as far as where we would encounter some resistance. I don't think that's the case. I think this channel is too steep for us to meet it at any recent price action, so I wouldn't count that. You could do fib extensions, but I don't think that's really important right now. I think the key to notice here is, if the market goes upwards, don't think about resistance, just think about momentum and when it's going to wane, and then that's where you want to go ahead and take profits. Now, to the downside, we have a couple of clear targets to look at as buy the dip scenarios. Now, more likely than not, over the next couple of days, if we print a bull flag, we're not going to really get lower than maybe 317. But if we do start to pull back a little further than that, keep an eye on the 20-period moving average, and keep an eye on this area around 315 as a really good buy the dip area. If we have more substantial pullbacks, I think that's where we're going to get to. That would be, I think, the most likely scenario is just that we drift very shallowly, maybe another point or two. But if we drift a little bit further down and get to about 315, I think that's a very good spot to go ahead and look to buy the dip. And any further, I think if we start to drop into the 308, 307 area, if we do that before the end of this year, that's probably not that great of a sign, and that probably means we're probably going to need more time to trade sideways. But I think in the intermediate to long term, it's still bullish, because we're still above this 302 area, which, as you saw in the long-term chart, was basically the upper levels of resistance of our 2-year range. And as long as we're really above that, or above 295, I think all systems are still go for a bull market rally into next year. But in the short term, it would definitely be indicative of a market that was not ready to break out, particularly if this happens during the holidays, which are typically times of bullish behavior and usually of very little selling pressure. So we don't really want to see a move back to 307. If we did see that, there's a very good chance that we will probably try to push even lower, if not on the first or second try of this, maybe on the third try. But it would definitely be indicative of a market that is starting to turn more range-bound, and we could maybe look at trading more range-bound style of play as long as that happens. But for now, I don't think that we break 315 between here and Christmas. and probably not from here to January 1st. Once the holidays are done and we get more traders coming back into the markets, then we'll see what happens. But from here to the end of the year, we probably don't lose 315. We probably hold above that, and we probably continue to try to drift higher and keep going up. So if we take a look at the calendar real quick, we've got 1, 2, 3, maybe 6 or 7 more full days of trading, or even with the halves, maybe 6 or 7 days of trading. So there's not a lot of there's not a lot of days left between here and the end of the year, and so I don't expect a lot of potential volume to the downside or a lot of selling pressure. I think for the most part we're going to just try to climb and try to hold steady and try to, at the very least, drift around these levels until we start next year. Now, if we look at the NASDAQ and we look at the Qs, we'll see again something very similar to the S&P 500. We've got a nice breakout that happened last Thursday, and we've been drifting higher over the last couple of days. You'll notice a little bit of relative strength compared to the S&P 500, and that instead of a bull flag, we're just sort of drifting upwards. So again, showing the lack of selling pressure in the market right now, showing the fact that the market is breaking out and wants higher, and we'll probably continue to drift upwards until we start to find some more areas of supply or distribution, which may not occur until the end of the year, because I think at this point we're kind of in a nice breakout mode, and unless some news really comes out of left field, I don't see there being enough selling pressure to push us back down. Now, the key levels are very similar to the S&P 500. If we do get any kind of substantial selling pressure, we'll come back down to about 205.70. I don't expect us to fall back below that from here to the next couple of weeks. If we do and we come back down to 200, then again, I think that's indicative of a market that was not ready to break out, and more likely than not will need to be range bound for the next few months, particularly if this takes place between here and Christmas or here in January. Once we hit next year, and if we pull back to that level, I don't think it's quite as bad. But if we pull back to that level during the holiday run, then I think that's a negative, and it more than anything is indicative of a market that needs more time to confirm the breakout it just had. Because again, if you think about it, in the long term, we just had a pretty substantial breakout. This is a very big breakout. We had a nice broad range consolidation we spent 2 years in, and we're now really starting to lift off and take off past that. And theoretically, we already even had a retest, because we had the initial breakout, we came back, we retested for a couple of months, and then eventually broke out. So this is a pretty big breakout. This isn't like some little minor push to new highs. This is actually a really strong, full-fledged breakout. And if we give this back from here to the end of the year, then it might mean that we need more time to kind of continue to confirm this breakout and spend more time hashing out this area around 189 to 195 and making sure there are enough buyers to really support the price action. But in my mind, we've already kind of broken through that, and if we don't get that sharp pullback, I think more than anything, again, it's showing that the market is starting to really lift off and wants to continue climbing and leave this area behind before it'll eventually start forming a new broad range consolidation, but hopefully not for a while. So again, long story short, right now we want to be looking to trade higher. We want to be taking advantage of bullish momentum. Ray, you said the quantitative money is moving it hard with these low interest rates. Yeah, and that's been the case. That's been the case now for, 10, 11 years? People might point to the Trump presidency. They might point to China stuff. There's all kinds of different reasons you could point to what the market's doing. But the truth is that it's really a function of what the Fed has done. And the Fed has indicated it's not really going to change that policy anytime soon. So as long as it doesn't change that policy, we just have to take advantage of it and let it climb and let it keep doing its thing. And one common thread that I've gotten from people over the last 10 years is that they don't trust this rally. They consider it kind of fake because it's been kind of Fed induced, right? And the truth of the matter is that, yeah, the Fed to a certain extent has really affected the way the market has climbed with its monetary policy, but this is still real money. If you buy these stocks, if you buy these ETFs, and you hold them, you're still getting real money in your bank account. So what we have to do is understand the environment we're in, understand what the rules are, and play by them and take them, take advantage of them, and use them to, in our favor, rather than just letting the banks profit from this. And that's what we need to do. So you say need to listen to the politics as much as I hate to say that, being a technical trader. Um, no, not necessarily. I don't pay attention. I'm not. Yeah, I'm a technical trader, and I don't really let politics affect my trading, and I don't even really let Fed policy affect my trading. I just follow the price action, and the price action may be a result of something that's happening with Fed policy, but that's not. I'm not gonna, even if the Fed says they're lowering rates tomorrow, I'm not gonna go ahead and go long just because they said that. I'm gonna follow the price action, because the price action, in the end, is the only thing that I can really. That I could really see it and kind of get draw a conclusion from what I'm seeing. Um, Oftentimes there's a pretty murky gray area if you're trying to interpret what is happening in politics and what's happening um, with Fed policy. And if you try to interpret it on your own, unless you have a really long window of a time frame and you really understand what they're saying, more likely than not, you're going to put yourself in a position where you might misinterpret something they're saying, or you might be early or late on what they said. So what I just follow the price action, because in my mind, the price action, it will give me the synopsis of what they're saying or doing, and to me, it's the more clear signal of what's actually happening in the stock market. So that's why I believe in using trend lines and moving averages and all that stuff. And some people will look at this and say, well, this is just mumbo jumbo. You're just connecting dots on a chart. But the truth is that all these lines are good representations of trader sentiment. Every time I draw a trend line, it's telling me what another trader is thinking. And so as long as I understand what others are thinking, then I can go ahead and take advantage of the prevailing direction and try to hop along or hop off when I feel like it's kind of run its course. Okay? All right, so with the Nasdaq, again, like the S&P 500, I think it's a very similar case. There's no clear-cut levels to the upside that we need to worry about, and to the downside, I don't think from here to next week, I doubt that we pull back below, say, maybe 207. If we do, I would expect 205 to be a very strong area of support and a really good spot to buy a dip if we did pull back to that level. Now, if we look at the Dow Jones, again, very similar to the S&P 500 and the Nasdaq, we are pushing towards highs, and you'll see, again, relatively speaking, a little weaker than the Nasdaq, right? Because we're actually trading sideways. We are encountering a little bit of resistance. You can see with the upper wicks over the last few days. I'll zoom in again. You can see the selling pressure start to come in as we've kind of climbed up into this 284 area. So the Dow Jones looks like it's stalling out. Not a surprise, again, because we just had a breakout. Eventually, the momentum will wane, and you'll get to a spot where you need to kind of trade sideways and print a bull flag, and then see if there's enough momentum to push upwards. And if there isn't, well, then you kind of come back and you test some of these previous levels, which is really what's going on throughout the other two ETFs as well. Now, as far as the Dow Jones is concerned, we do have a much more clear-cut level of support here around 282. And if we do pull back to that level again, I think that's a good buy the dip area. If we fall below that, I would expect the 20-period moving average to support price. And I don't think we're really going to fall below that from here to Christmas. Again, I think it's going to be a situation where there's not that much selling pressure left to push us in during the holidays, when there's typically less volume and less engagement from professional traders. So I think at this point we should probably expect price action to either drift sideways or upwards. And if it does come down, it shouldn't come down too strong, and we should get shallow pullbacks from here to there. And really, there's nothing else I want to add to the Dow. Most of the analysis of the S&P 500 and the Nasdaq also applies to the Dow Jones, because those three indices are all trading very, very close to each other. And really, there's just different degrees of strength between the three, but they're all doing the same sort of thing. The last one I want to look at is IWM, and IWM, of course, is a little bit of a different animal. And you can see today we're actually attempting to break out already, although I don't like this. You don't want to see a hammer candle at highs. That's really not a great pattern, but it is at least attempting to break out of this little bull flag. You can see, again, I'm going to zoom in one more time, and I'll show you guys. So you can see there was a lot of selling pressure over the last 3 days, not counting yesterday, right? So a lot of, okay, there we go. A lot of wicks, a lot of selling pressure after a breakout. But the good thing is we did have that nice breakout on Thursday and started trying to climb higher. And at this point, we are attempting to move past that selling pressure. I'm not doing a great job of it. You can see that we did have a bit of a push downwards. But overall, IWM is still trying to climb. And I think this is, again, the key. This has been the key for me throughout the year. Those that are regulars here know that I've been watching IWM like a hawk, and I've been waiting for a breakout of 158, and I expected a strong rally in the market once we were able to get IWM to break through there. That's something I've been harping on all year, since basically February, and actually really since May, when we had that attempted breakout that failed. And we've been watching IWM, and the idea is that IWM is a good proxy for risk appetite in the market, right? Those of you that are regulars know I say this all the time. If traders are looking for gains, if they're looking to take advantage of bullish momentum, if they're being greedy, they're going to take advantage of it by going to the more volatile assets, which tend to be the small caps. So IWM being able to break above 158 has been a critical point, and really something that we needed to have in order to see bulls getting really more aggressive about trading to the long side. We finally got that, and that has coincided with a pretty big breakout across the board, in the markets. And so as long as this breakout continues, as long as IWM continues to trade in this vacuum and start to make its way towards all-time highs, I think that we are in a good state and a market that will continue to climb higher, obviously. So as you can see, there's still a nice vacuum here before we get to real substantial resistance around 170 on IWM. And there's really not that much selling pressure up until that point. Maybe 169 to 170 is where we'll start to encounter really strong resistance. Until then, there is some previous price action, but most of the real trouble is around 170. And so as long as IWM keeps climbing up to those levels, I think we're going to continue to see a pretty strong rally in the overall markets. Once we start contending with those all-time highs, then maybe we'll get a more substantial correction. And until then, I'm anticipating, again, just a more of a strong climb upwards. Now, that's not to say we can't pull back over the next couple of weeks, and if we do, then we have to just watch the nature of that pullback. And the real key is we don't want IWM to fall back below 158. As long as that doesn't happen, I think we're in very good shape for a continued rally into next year. And obviously, from here to the next couple of weeks into January 1st, I don't expect IWM to come anywhere near 158. I think if we can just hold above, say, 162 in the 20-pair moving average, hold above maybe this 163 area, then I think it's still all systems go, and we're still in a bullish place where we want to go ahead and take advantage of bullish momentum to the upside. And so overall, like I said, if we look at all four of the major market ETFs, things are looking good. Things are bullish, and we should not be in a state of worry or panic right now. We're getting close to the end of the year, and this is a good time where momentum is strong, where we can go ahead and try to add gains as we try to close out the year, and hopefully close out on a positive note before we start moving into 2020, and hopefully start 2020 on a good note with some trades that are already profitable that we can work with as we start to approach a new year. Because, it's always nice to start on a good foot or end on a good foot, and we're right at that point where we want to go ahead and not get too cute with our thinking, and make sure that we take advantage of what I think is pretty obvious price action right now. I think for the last couple of weeks, the price action has been pretty obvious, and if we just follow what it's doing, we should be doing well as we've gone through. Okay, so that's the four major markets. I don't, we're bullish. We should be looking to trade to the long side. Don't chase the price action. Just look for names that give you good risk reward, but trade to the long side and take advantage of that. All right, let's take a quick look at the US dollar, and then we'll get to the chart requests. I'll also give you guys a little synopsis of some of the trades that I've recommended in my Patreon over the last couple of weeks when we do the chart requests, just to give you an idea of what trades we've been looking at and what's been working and what hasn't been working. But before we do that, we'll look at the US dollar and gold and silver. So also, those of you that are in here, I'd love to see what charts you guys are looking at, or if you have questions on it. It doesn't necessarily have to be a stock that you bought or shorted or anything like that. It could even just be if you have a question about something that you're seeing. All right, so if you look at the UUP index, the US dollar actually had a nice pullback last week, and it's had a reactionary bounce to the upside. This is actually not that bullish of a move. because we had a breakdown and we're just coming back and retesting that breakdown area. It's not negative at the moment, but it could turn negative depending on if it comes back and breaks this trend line yet again. So overall, I would say this is a sign of a dollar that's losing strength, and I think the key for that, of course, is what it's doing versus the euro, which is the opposite of that. But you can see the euro climbed upwards. So this chart is an inverse of the UUP because it's based off of the euro. And you can see the euro had a nice climb upwards like we looked at last week and thought that could happen. It did find resistance right around 118, and it's starting to pull back, and this is that reactionary pullback we saw on the index. But I think overall, again, the euro continues to do a good job of establishing a longer-term bottom here. And while it's not ready to break out, it is definitely, I think, progressed to the point where we could say it's in a neutral range and trading sideways. And that's probably indicative of what the US dollar is doing as well. Now, interestingly enough, we do have a very different price picture when we look at the US versus the Canadian, we look at the US versus the yen. Versus the Canadian, the US dollar continues to lose momentum here, and looks like it wants to make its way all the way back down to 130, 129. And I think that this, again, is also a picture of what's happening in oil. That a lot of times the US versus the Canadian trades inverse to oil. It's a main export of Canada. And as you can see, oil has climbed pretty strongly in price and is starting to threaten an acceleration of price action as it starts to try to climb above this channel. I think oil is going to come into some pretty stiff resistance right now, and more likely than not, it will concur with the U.S. dollar finding some support down here against the Canadian dollar around 130, 135, 130, somewhere in that area. And from there, we'll see what happens. But I think overall, as far as the U.S. dollar is concerned, you can see it's losing momentum versus the Canadian, and it's kind of lost momentum versus the euro. However, it's done a good job of climbing versus the yen. And again, I think this is probably more a function of yen weakness than U.S. dollar strength. But we got that bounce trade that I recommended for anyone that likes to trade Forex last week. I thought that this was a good move. Potential bounce play off of 108.6, 108.7, and it had the very nice move all the way up to, it's basically almost a 100 pip move. And anyone that trades Forex would have, this is a very nice spot, or was a very nice spot to go ahead and take advantage. And I think that there's potential for more upside here. You can see that this area around 109.56, 109.6 or so is a very stiff level of resistance, but once it breaks past that, there's another potential 100, 200 pip move as it starts to make its way upwards. And again, I think that I mentioned this inverse head and shoulders that we had recently, and it's doing a good job of trying to push through. So if you're looking to trade the US dollar long, versus the yen is probably the best of the three crosses we like to follow. Ray, you're saying being that gold has been tracking the US Canadian, you see US dollar going down, you see GC dropping or finally doing the normal. Okay, I'll look at that in a second when we get to gold. Alright, so here's GLD. And so your question is, I don't know that GC has been tracking the U.S. Canadian. I think it's just tracking the U.S. dollar. I think the U.S. Canadian is more correlated or inversely correlated with oil than with gold. But I think in general, if you just look at the U.S. dollar itself versus gold, you get a stronger connection. And unfortunately, for now, like I said, if you look at the big picture, right? So if we go and we take a look at UUP, the big picture, the U.S. dollar is trading sideways, right? And so gold is trading sideways. So there, at the moment, it's not so much that the U.S. dollar is pushing or forcing gold or silver down or up. It's that at the moment, the U.S. dollar is not really affecting gold. So gold is kind of trading off of its own momentum, and it's kind of struggling. So it's more of an indication now. As long as the U.S. dollar continues to trade sideways, it's up to gold and silver to do its thing, rather than rely. Now, the one thing that's kind of weird is, over the course of the last year or so, gold and silver have actually traded strongly at times with the U.S. dollar, right? So if you look at if you just look at what's happened since like June, right? Gold went up and then traded sideways, and if you look at the U.S. dollar, it also went up and then traded sideways, right? So To a certain extent, they're trading. They're actually trading in a actual real correlation right now instead of inverse correlation. That typically happens when the market is very weak, but maybe sometimes it happens when the market is very strong as well, as money just flows to different places. But more often than not, when I notice gold and silver trading in a strong correlation, that's usually when money's flowing to them and out of equities, and that's not really what's happening right now. So I couldn't begin to tell you when it's going to change. Like I said before, I follow technicals. I don't follow fundamentals. So what I do is I look at the chart, and despite the fact that gold and silver often have an inverse correlation, I just look at the if I just look at the GLD chart, like I said last week and the week before, GLD is trading below what I think is a kind of an important level. It's not a critical level, but it's a pretty important level that's kind of held pretty strongly over the last 4 or 5 months, 6 months. And until it trades back above that, I'm not that excited about trading to the long side. Now there is, if I can change this trend line a bit, there is some potential for gold to try to break out. You can see it's been printing a nice little triangle pattern as it bumps its head up against 140, and it's been slowly climbing up to try to meet that, right? And we're getting pretty close to the apex of these two converging trends. So there's a chance gold breaks out past 140, and once it does break past 140, I'll be a little bit more amenable to trading gold to the long side again. Until I see that, though, I'm not that excited because, again, I feel like you look at the moving averages, they're curling back down. Momentum is still slowly kind of going backwards on it. Now, it did finally break that downtrend, so that's good. However, you can also kind of reappropriate this trend line as well and take a look at what's happening here in the bigger picture trend. And there's more work to be done. So I know you're long gold and you've been long gold for a while, so I'm not gonna sway you one way or another with whatever I say today. But for anyone else here that is looking at gold or silver and they're thinking, when should I go long or what should I do? Well, in this situation, you take a look at where all the price action is. You look at the moving averages. You look at this price level around 140. You look at the intermediate descending trend here. The bearish sentiment that's come in. Well, you want price action on this side. Once the price actions on that side, well, you've broken all this bearish sentiment, right? You've broken this price level. You've broken the moving averages going down. You've broken this intermediate term pushing downwards, and you followed the short-term trend that's going upwards. So this is what you want to see. If you want to be long gold, or you're going to be long gold, you want to see the price action on this side of all these technicals. And once it's there, it's got a little bit more free room to try to push upwards and try to climb higher. So that's what I'm waiting for if I want to trade gold or silver. Okay, and I've noticed weakness come into a lot of gold names that I was looking at and following and even trading to a certain extent. We take a look at KL, and I mentioned this a couple of weeks ago. I had a pretty big drop off a name that's been very strong, and then the other name that was holding up pretty well had a recent drop, pretty ugly drop the other day, which is TRX, which was doing a pretty good job of trying to establish. So I'm seeing weakness across the board on gold miners. Not across the board, but I'm seeing isolated weakness that's coming in through individual names, and it's showing me that there's something going on here. So until this story changes, I don't want to really be long gold or silver. I think there are plenty of other strong areas in the market that are giving better returns right now for me to be concerned with gold and silver. Because gold and silver, I mean, again, this is another one. It's if you want to really, you take a look at what's happening here, and it's the same sort of picture. It's below a pretty critical level, and until it can break past that, until it can break this downtrend, you want it on this side, right? So, that's really the key, is you want to wait for it to break through that and to get back into that area, okay? And finally, like I said, we have oil, which I think oil is doing pretty strong, or doing very well. Oil names are probably doing well. I haven't really been following them over the last couple of weeks. But I think it's coming up into resistance, and despite the strength here, I'm not that excited about going long because there's just not good risk reward here. All right? So from that, let's move on to chart requests. while I wait for your guys' chart requests, I'm going to just kind of review a few of the trades we've taken recently, but feel free to type them in now, because when I'm done looking at my names, we'll be done unless there's someone else has a chart request. All right, so just going to go down here to my watch list, and we'll start with a recent one. I just recently added PTON as a possible trade idea. And what we were looking at was this. You take a look at this selling pressure, or the buying pressure that came in here as it was at the $30 range. It had a really good job of breaking out yesterday. We anticipated potential resistance coming into this trend line, which we found pretty quickly, and it's kind of come back. But I think overall it's doing what we want, which is starting to push itself and hold above 32 and eventually try to break through that. This was a more open-ended trade that we're looking at through the holidays. And as long as it stays above 30, I think that it's doing well off of a pretty nice IPO. It had the IPO, and then it kind of broke out, and then it's been kind of trading in a nice consolidation range, and we're looking for momentum to push through that. Another name I wanted to point out was one that was actually brought up as a chart request here, which was AMD. And as you can see, AMD has actually provided us with a very nice trade once we did what was recommended. So those that maybe don't remember, AMD was recommended, Butterface asked a question about it, really just as a point of discussion. He's like, well, what about AMD? And we looked at it. This was the day that it was put in as a chart request. And I mentioned, with a name like this, what I like to do with these names is just put it on my watch list and wait until I see a pattern that gives me a better opportunity to go ahead and take advantage of it. So in this situation, risk reward is poor for a long play, right? But what you want to do is you want to find names that are making new 52-week highs, that are pushing upwards, that are clearing new levels, and then you want to watch them consolidate, right? And it did have this false breakdown, but it kind of came back, and then it eventually broke out. And some traders wouldn't want to trade that breakout because of what happened before. But then it gave us a really nice secondary trade once it came back and confirmed that breakout, and then eventually pushed through. And it's done a really good job since then. And it's kind of coming up to a pretty critical level, but at this point, profits have been taken on a good portion of it. But again, showing you this is what you want to do when you see a name like that that's really strong. You don't need to chase the price action higher. Just wait for it to consolidate. Wait for the breakout that you're looking for, the right momentum trade, and then take advantage of it in that sense, right? And so this ended up being a pretty good trade off of a stock that was recommended here as just a talking point, not even as a potential trade. And it ended up working out pretty nicely once you see how it plays out, and you go ahead and put on your watch list and just wait to see when that momentum's going to return to these. Because that's what you want to see, is when you see a name that's really strong pushing into new highs, you know that sooner or later it's going to take a break, but once it does, it should kind of turn around and start following that previous momentum, which is what I was saying before about trying to follow the momentum upwards. All right, so another one we've been looking at is SBUX. And SBUX was another recommended trade based off this breakout at 84, and it's done a very good job. It's given us 4 points of upside, and probably has plenty more room to go as it's been kind of slowly making its way upwards. But I think at this point, it's been a nice steady mover for us over the last couple of weeks, and it's done a good job. And again, this was another one. Pretty much all of these that I've mentioned so far have been on our Patreon page as recommended trades, and for the most part they're doing pretty well. One trade that did not really do well was BE. But again, this goes to show not every trade works, of course, and what's important is having these clear-cut signals to go ahead and kind of take your losses at the right time. So BE was a nice, I don't want to say cup and handle, but you had this nice kind of cup and handle trade. And basically you had this breakout above $6, you came back and retested, and then what I played was to break past it, but that faded pretty quickly. And while it's back up to this level, we stopped out once it broke back below $6 and took a small loss on the trade. So not all trades work, but what's important is to understand why you're in a trade and to not punish yourself by trying to hold on to it longer. Now, someone that held on to this would have come back now to being profitable, but that wouldn't have been a good trade, and it would have been poor trade management. Sometimes they just don't work for you. And part of trading is understanding that you will have trades that don't work in your favor, but it's more of a taking probabilities into concern, and understanding that over the long run a certain percentage is going to work in your favor and a certain percentage will not. BE happened to be one of the ones that didn't. All right. Now on the other side, we have one that's working tremendously well for us, which is renewable energy, and this is one that actually I've pointed out on the Wednesday webinars as well. You can see again, we had a nice base and a breakout above it, and I was really focusing on these a couple of weeks ago when I saw IWM breaking out. And so I was looking for small caps that are doing something very similar, and you can see we had the very tight pattern of consolidation. We had the break above the 200 period, which is a great entry. For those that missed the entry, like always, there's always more often than not, there's a breakout and then a retest, and then you eventually get another move. And of course, with the big gap that we had yesterday, this trade has given us a lot of profits, and is up very strongly over the course of the last week or two. And if you think about it, for an entry, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12 days now, so a little over 2 weeks, and we've gone from 17 all the way up to, we were up around 28 yesterday. So, the same sort of thing. You find a trade that gives you good risk reward, gives you good parameters, a good reason, good stop out area, a good target, and you let it work in your favor. And this is one that's been working out really well for me and for any of my readers that took advantage and followed me on this one. Now, the next few these weren't Patreon trades. It's just names that are on my watch list. Just want to go ahead and show you what I've been looking at and why I'm looking at it. So, Hostess is one I was watching as I was trying to break this downtrend. You can see again, we had the breakout, the retest, and then it had the break above it. NXPI is another one that's been showing strength as it's been breaking above this kind of sideways consolidation. LKQ is doing something very similar. It's starting to break out today. And again, these last 2 or 3 aren't ones that I recommended on Patreon. I just wanted to go ahead and show you some of the other stuff I'm looking at. Now, another one that was a Patreon trade is CarMax, and it's working slowly for us, but it's working. Again, we had a breakout and a retest, and then once we were able to break that downtrend, it's been slowly working in our favor. But we have a clear stop out. We have our first target, which we're getting close to, and then hopefully it could push past 100. But another trade that's slowly working in our favor. Just giving you an idea of the patterns that I'm looking at and what I'm trying to figure out when I'm trading. And then the last one I want to look at is Smartsheet, just one we looked at a couple days ago as well. And as you can see, we had a range of consolidation, a breakout, and a retest, right? We had the falling wedge, and then a break past that falling wedge, and over the last 3 days, it's starting to work for us. This is a pretty recent trade, so there's definitely more room for improvement here, but we've only been in this trade for 3 days now. Again, we have a clear stop out, we have our clear first target, we have our clear potential move on an extended move, which is not something I'm looking for, but I'm looking for really is a move back to the 46 to 48 range. And then from there I'll make a judgment on when I could go on from there. But as you can see, there's kind of a common thread between a lot of the trades that I've been looking at recently, and particularly the ones that I post on the Patreon page, because typically I'll look at a bunch of names and I'll trade some, but I try to put only the ones that I have the most confidence in on the Patreon page, and particularly the ones that are giving the best risk reward or the most clear-cut patterns as far as giving us triggers to enter and exit a trade. And so this is kind of just a review of some of the trades that I've recommended recently, and you'll notice a common thread. More often than not, I'm looking for names that are in a pattern of consolidation, and once they push past it, they come back and retest and give us good risk reward. And you're trading to the long side, and you're kind of trading a breakout, but you're also you're buying value. Because in this particular case, I'm buying a breakout of a falling wedge. So in a certain sense, this is still counter trend, but I'm also playing bullish and I'm playing value, because I'm basically buying a level that was a level of resistance and has become a level of support. So that gives you kind of manufacture a good risk reward here, because you're buying very close to a level where you could stop out from, and you have plenty of potential upwards profits. Definitely upwards level of potential profit from that level of support. So hopefully that gives you guys a better idea of what I've been looking at and how I've been following the advice that I kind of give on these Wednesday market streams, because a lot of times we just cover the major markets, and I tell you, well, go ahead and take advantage of the long side, but look for good risk reward. And you don't always know what I mean by that. Well, you can see through some of these examples where I've been looking and what kind of risk reward I've been trying to take on these trades, and um, how I've been taking advantage of what I consider to be a pretty productive market environment. All right, Ray. Enjoy the week with your family, um, and the holidays and all that. That's really what it's all about. Okay. All right. So that kind of covers it for today. If no one else has a chart request, we can wrap it up here. And like I said, we're not going to meet next Wednesday because next Wednesday obviously is Christmas. So, and actually the Wednesday after that is January 1st. So we're probably not going to meet for 2 weeks unless I randomly decide to do one in the middle. I'm pretty sure we're not going to meet for 2 weeks because I'm not going to do one on the 30th or the 31st, and I'll probably be gone for most of next week. So, for those of you that are here, have a very nice holiday break. Enjoy the time with your family, and we will meet again probably at the start of 2020.